Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be doing a details into the cash secured puts. I'm going to show you how you could use the cash secured puts, even if you're trading with a small account, in order for you to make consistent income over time very safely. Now, if this is something you can relate to, or you're trying to get into options trading in order to make some extra income, or in fact, you are new to options, then this is definitely the right video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be doing a deep dive into the cash secured put, and I'm going to show you how to relate this option strategy while using a small account. This should help you grow your small account consistently, safely over time. Now, these option strategies are not a get rich quick overnight. You will need to learn these strategies and how to make it very effective and efficient for your portfolio. Now, for today's video, we're going to be using none other than SoFi Technologies. So let's go ahead and get down and dirty with options. And to get that started, we're going to go into the advanced feature right here to the top here in order for us to open up the charts. Now, before I get into any options decision or any stock, I always like to refer to the charts just to get some additional information, just to confirm my already made decision. Now, we're going to go right now to the 1 year outlook right here. And what we're looking for, we're looking to see where the current price is trading compared to the 200-day moving average. Now, this blue line you see here is a 200-day moving average. What that tells you is that that shows you where the stock is trading for the last 200 days. Now, currently, you could see that SoFi should be trading around the $12 mark within 200 days. Now, the 200 day is going to be right here, is the MA200. Now, if you guys have not used this indicator before, this is on Robinhood and it's pretty much free to use. If you want to customize this indicator, you simply go into the settings button right here, and then you could go ahead and customize or delete it entirely. Okay, so the 200-day moving average is definitely one of my go-to indicators I use before making a decision. Now, what we're going to do now, we're going to go over to the 5 year outlook and see if that's still the case. And as you can see here, it's still the case. Once again, SoFi is trading above the 200-day moving average. Now, I like to pick up my stocks or my options whenever the share price is trading around the 200-day moving average. This is not an exact science, it's just merely a guideline. So as you saw, with the 1 year outlook and the 5 year outlook, SoFi is trading above the 200-day moving average. Now, any good trader or any good investor knows that you always need to get secondary confirmation. One indicator is not enough. So what I'm going to do, I'm going to go ahead and use a secondary indicator, which is known as the RSI. So here it is, the RSI, or the RSI stands for the Relative Strength Index. Now, this indicator is a momentum indicator. And what it does, it shows you the overbought or the oversold process of any stock over a certain period of time. And this one is going to be 50 days. So if we were to follow this line right here, you can see that Robinhood right now has an RSI of around 61. If you go all the way to the end of the line, you're going to see that. Now, any RSI from the $50 mark going upwards towards the 70 mark tells you that that share price is going into overbought territory. Now, if a stock is going into overbought territory, then that helps you make an even better decision about what option strategy to get done with it. Okay, so now we have confirmation using our RSI indicator that the stock is trading a bit high. We also have confirmation using the moving average 200 days that the price is trading above where it should be trading at. Now that we have those concrete evidence, now we're going to go ahead and get down and dirty with options. Now, before I go ahead and show you these option strategy, guys, I want you guys to do two things. The first thing is always going to be always make sure you do your own due diligence before investing. The second thing is that always make sure you have an exit strategy before entering any options trade. Once you guys are good with that, then you can go ahead and start doing your trading. Now we're going to go ahead now and go to trade SoFi options down to the bottom in order for us to open up the option chain. Now, this entire area here is known as the option chain. Now, for most of you guys that do not know, on this channel, we help people with small accounts portfolio grow their portfolio consistently over time using different option strategies. All the option strategies on this channel are geared towards getting some kind of income whenever we were to do the trade. So, if you need any help with that or you need some one-on-one coaching, then that link is definitely going to be in the description below. Get help today. It's going to be worth it, I guarantee you. Okay, so now we have those facts about SoFi. Yes, I stress facts because I just showed you. Now we're going to go ahead and implement the strategy. So we're going to go now to sell and we're going to go to put because what we actually going to be doing, we're going to be selling puts. So now we're going to go ahead and choose our strike date. Now the strike date is a matter of preference and I will show you in just a second. Let's just go with an example of May 9th. Now, the May 9th strike date gives us 9 days to expiration. And now we're going to go ahead and choose our strike price. So we're going to be going with a strike price of right where we saw the 200-day moving average was, and that was the $12 strike price. Now, with the $12 strike price, you have a very high chance of profitability, which is about 80%, which is pretty decent. That tells you that you have an 80% chance of this trade is going to go in your favor. Now, this is an income generating option strategy. So you're going to be paid, the amount you're going to be paid is going to be 0.17 or $17. Each option contract is multiplied by 100 shares. That's how we come up with $17. Now, in my personal opinion, I don't think it's worth it for me getting $17 to wait 9 days. So what I'm going to do is that I'm going to go ahead and select a different strike price to see if that's going to be able to up my premium. So now we're going to go ahead to the May 16th. And ironically, that gives us 16 days to expiration. Once again, we're going to go below the current share price. And then we're going to choose the exact same strike price where we got confirmation from the 200-day moving average. And that's the $12 strike price. Now, with May 16th, which gives us additional couple of days, now this is 2 weeks. Now our chance of profitability has gone down just a tad. So it was previously 81, now it's 78. Let's just round it up to 78. However, now this option is paying a lot more. It's paying $27. Now, that's what I was just trying to explain to you. The strike date is going to be a matter of preference and what you're comfortable with and your risk tolerance. So I am way more comfortable accepting $27 to wait a 2 week period as opposed to getting $17 to wait for 9 days. So always keep that in mind. This is all based on your own personal preference. Now, in order for this option strategy to be the most effective, it is highly advisable that you choose your strike price here below your current share price here. It just gives you an even higher chance of this trade going in your favor. So let's go ahead and click into the $12 strike price. And there we have it. This is none other than the cash secured put option strategy. And like I mentioned, the cash secured put option strategy is an income generating option strategy, meaning as soon as you implement this option strategy, you're going to be paid. The money you're going to be paid is going to be directly in line with your bid price. So the bid price that we chose here is 27 cents. Translated into the real world is going to be $27. Let's go ahead and hit continue. So the cash secured put is a perfect option strategy for anyone getting started with options, or if you're new to options, and even furthermore, if you're trading with a small account. As you can see, SoFi is trading at a price of just $13.16. So that creates a very good barrier to entry, meaning anyone with a small account would be able to trade this stock as opposed to trading one of the big boy stocks like Apple or Nvidia, which cost hundreds of dollars per share. So it does not matter what size your portfolio is, always look for good stocks within that realm of your amount of capital that you could deploy into these option strategies. Now I'm going to go ahead, I'm going to show you how this option strategy works out. So first of all, whenever you do the option strategy, you're going to be paid hands down. For this example, the amount you're going to be paid is going to be $27. Now, here's the good thing about the cash secured put option strategy. This $27 is yours to keep no matter how the trade goes. And this income is what you could do consistently to help you grow your small accounts portfolio. Okay, so there's two ways in which this trade could go. Come expiration date of May 16th, if this share price right here does not hit the $12 strike price we chose, then we get to keep our income that we receive, which is the $27. Now we're going to get our collateral released back to us, and then we're able to do this trade again for another couple of weeks, hence generating consistent income. Now, one of the caveats for the cash secured put is that in order for you to execute this option strategy, you must be able to leave collateral. Your collateral is always going to be whatever the strike price you chose multiplied by 100. And that's because, once again, each option contract does contain 100 shares. So the collateral in this case is going to be $1,200. So that $1,200 is going to be released back to you in order for you to keep doing the trade over and over again. Now, hear me out right here. Always try your best not to focus on the monetary value that you're receiving. In this case, it's going to be 27 cents. What you try to do is try to get a percentage value. Now, if you were to divide your $27 divided by your $1,200 that you leave as collateral, you will see that you're actually going to be getting around a 2% income. A 2% gain is a pretty decent gain. It's safe, secure, and you're making 2% from the comfort of your own home doing an option strategy that literally is going to take you less than 5 minutes. So keep those things in mind and don't always focus on the monetary value that you will be receiving. Or how we say in the option world, don't be chasing premium. Now, the other way this trade could go, once again, come expiration date of May 16th. If this share price right here of 13.16 is anyway below your $12 strike price that you chose right here, well, now we're going to have to buy 100 shares of SoFi at the $12 per share mark. Now, the reason why we have to do that is that we signed a contract that if SoFi goes below the share price of $12, then we're willing to buy it at that particular price. So we're gonna lose our $1,200. However, now we will own 100 shares of an already good stock because we did our due diligence. We realized that it's a good stock and it's a stock we don't mind owning in our portfolio. So now we're able to get 100 shares of a good stock in our portfolio at a much lower price. But here's the caveat once again, we get to keep the initial premium of $27. Remember, I mentioned that money is yours to keep no matter how the trade goes. And that is why I always advise anyone to get into income generating option strategies, especially a strategy such as the cash secured put, which I like to refer to as a win-win option strategy. And this income that you're receiving here, I like to refer to it as investment gains. The reason that I call it investment gains is that you're going to be investing $1,200 in order for you to make this amount of money here. So your return on your investment is going to be your gains. So, investors and future investors, that is the cash secured put in a nutshell. Of course, there's other factors that go into it, which I'm not going to get into this video because I don't want to make the video very long. I don't want to overcomplicate it where you're intimidated and don't want to do these option strategies. To get started, I simply advise that you just stick to the basics for now. As you go along, you're going to learn it, I guarantee you. Trading options is not a black and white thing. You need to play around with different strike prices with your different expiration dates. This is something, the only way for you to learn it and be good at it, you have to get down and dirty with options, meaning you have to practice, practice, practice. It does not matter how many videos you see, how many books you read, you have to go ahead and get down and dirty with options. That is the only way you're going to learn these option strategies. Now, like I mentioned earlier, if you guys need any help doing cash secured put or any income generating option strategies, I do offer one-on-one consulting. And again, that's going to be in the description below. Now is the time to get into the action. The next best time to get into the action was yesterday. So thanks for watching. Go ahead, do me a favor, like the video, subscribe to the channel. Hit that notification bell to get an alert whenever I post a video. I do post pretty often. And most importantly, if there's someone out there you know that's struggling to grow a small accounts portfolio, then the right thing to do is to go ahead and share this video with them. Let's help as many as we can. And until the next video, keep pushing for investments.